We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Charles Mathias, who's Group Executive Director and Group Director of Underwriting for Fidelis Insurance. Charles, welcome.
Thank you very much for having me.
So Charles, it's a very different operating environment now from the last time that we all gathered in Monte Carlo. What lessons can the reinsurance industry learn from the last 3 years?
I think really the largest lesson that we can learn is about having real clarity around the product that we're selling, what coverage are we giving, and making sure that when we sell a product to a client that we are specific about what it does and does not cover, and that on our own behalf that we are clear about how that product aggregates, what kind of limits we can sell. And I think that's true of whether it's cat risk, pandemic risk, or now as we're seeing with conflict, with war and political violence, we've got to have real clarity around what we're selling and how we aggregate it. And I think that's been the big lesson of the last couple of years.
And that speaks, I guess, to the relationship between underwriter, broker and client. How has that developed, do you think?
The way that we worked during COVID it allowed us to carry on working, it allowed us to carry on servicing our clients, but it has real limitations. And we've been very, very clear that we think we work best as an organisation at Fidelis when our people are in the office communicating to each other. We're not just selling widgets, we're trying to develop new products, hone and refine products, and that needs collaboration between not just underwriters but actuaries, the claims people, the compliance people, the wordings team, the legal team. So it needs a lot of collaboration, and that really does need people working together in one place. And I think what we're seeing here this week is that there is a real appetite for face-to-face meeting, for the ability to sit down and talk with your client and your broker and your underwriter and have the discussions that help us develop what we offer.
So people are starting to talk now in terms of a genuine hard market, and a lot of people won't have experienced a hard market before. You guys obviously very experienced people, you will have done. What kind of surprises might we expect to see?
I suppose every hard market is different in a way. You're right, we do. We have a great deal of experience. We have a great deal of grey hair and no hair. Richard Brindle, our CEO, has been in this market for 38 years now. I'm not far behind. And that experience really is valuable, I think. When you've been through those big dislocating losses like Hurricane Andrew, like the World Trade Center, like Katrina, Rita, Wilma, which have shifted perceptions of risk, I think that's a really valuable experience. And, the market clearly is hardening. I thought it was quite revealing that in the sort of pre-conference announcements from the major brokers last week, Aon, Guy Carpenter, Gallagher, Howden, that they're all representing the same message, which, this is going to be a tough market to navigate. So I think that's quite unique. I think then also you will perhaps see, and I know there's been some talk about it here, that perhaps like after Andrew and World Trade and Katrina, Rita, Wilma, will you see the disaggregation of all risk covers for natural cat into single peril covers, where, to my first point, there is real clarity with the client about what you're selling them, how it attaches. So I think that's something certainly that is in the air here. And then I think, as I say, there are always surprises. This hard market seems more to be driven by a lack of profits than a lack of capital, but it is very evident talking to the bankers here that there is no capital waiting to come into the market in any meaningful capacity, and that also, I think, is driving this understanding that demand will be rising, supply is flat or down because of the impacts of investment returns, and that therefore this is going to be a tough market to manage.
So the role of investors and providers of capital is crucially important. You've given us a sense there of some of the conversations that you're having. What other sense do you get about investor appetite for insurance risk?
I think on the natural catastrophe side, I think that investors have somewhat lost confidence that we as an industry actually know what we're doing, that the industry as a whole placed a reliance on modelling outcomes and used that as a substitute for underwriting, and it's led to some horrifically bad results on reinsurance over the last several years. And I think from an investor point of view, the model was what underpinned their willingness to invest. Great, it's not a correlated investment class, so it doesn't match the economic cycle, but it still has to make money. And I think there's a real feeling with a lot of investors that there's a skepticism about whether this industry really knows what product it's selling, how to aggregate it, what the frequency and severity dimension should be. And I think that's created a real dearth of interest in the sector at the moment. And I think until we repair that confidence, I don't think there's going to be a ton of money waiting to come in.
So it's interesting, we've heard a lot about people rebalancing their underwriting portfolios, perhaps shifting away from some of the more heavily modelled risks into risk areas that are perhaps less heavily modelled. How does that tie in with that point about investor confidence?
Scarily, I think, is the answer. I think it's well known that Fidelis, we are highly sceptical about things like cyber. As Richard is always saying, we've had a whole series of people come and talk to us, and smart people come and talk to us about cyber risk and how they think about aggregation and tail risk scenarios. And it's very evident that there is no consensus around what the tail risk scenarios are, what the systemic risk calculation should be. And our view is, if you don't understand your tail risk, how do you price for it? So we're sceptical about that area. But at the same time, we do think it is absolutely vital that as businesses, corporations, the value of their business doesn't sit in bricks and mortar any longer. It sits in intellectual property, it sits in their economic risk, that we do develop products that address that risk. And we're constantly trying to innovate around asset protection, around intellectual property protection, working very closely with our brokers, but there is a lot of client demand for that. But we think, again, it's about structuring a product where you are very clear about what coverage you are selling to your client before you step into those areas.
Charles, thank you very much indeed for joining us.
It's a pleasure. Thank you for having me.
For AM Best TV, I'm Richard Banks.